So let's move on to trading routine. So all successful traders follow a very consistent routine daily in their trading process. So for example, I would divide my trading into swing trading as well as day trading or scalping. Okay, so for swing trading, my routine happens at about 10 a.m. Singapore time. Now I live in Singapore and I trade the US market. So US markets open at 9:30 a.m. US time, Eastern Standard Time. So that's 9:30 p.m. Singapore time, right? So for me, the markets open in the evening for me at 9:30 p.m. So what I do every day, my routine is at 10 a.m. To 11 a.m. is about an hour. I will run through my trading routine for my swing trades. So what I do is I look at how the market closed the day before. All right, where's the S&P 500? Is it bullish or is it bearish? Then the next thing I'll do is I'll use TC2000 to screen for trade setups based on the different strategies. For example, the bounce strategy. Okay, so I'll screen for long setups or I'll screen for short setups. And once I screen for the setups, I'll look at the individual charts and pick two of my favorite setups to trade on that day. Okay, now if I don't find any setups to my quality, to my liking, I don't trade at all. Only take A quality setups, but maximum of 2 setups a day. That's my routine, right? So once I get a 2 setups a day I'm going to take, I will then key my order in to my broker, right? So for example, I use my broker, I key my orders, my entry price, my stop loss price, my target price. I key my order way before the market opens. And once I key my order, that's it, right? So when the market opens at 9:30 p.m. Singapore time, my orders will trigger if they meet my conditions, right? So that's the routine for my swing trading, right? Now for day trading, which is basically intraday scalping, that's what I'll teach you guys in level 2 of this course. That trading routine begins at 9 p.m. Singapore time, which is 9 a.m. US time. So that begins half an hour before the market opens. So I'll look for trades which I'm going to scalp based on news, based on high relative volume, and I pick a maximum of 4 stocks. Okay, so once again, I place in my orders at about 9:15 p.m. Singapore time, 9:15 a.m. US time. And then the moment the market opens, I will get my orders triggered and I'll usually exit those trades within about 2 or 3 minutes because it's an intraday scalp, right? So that's my routine. I know it very well. I'm very familiar with it. And I keep running that same routine every single day. Is it boring? Yes, I can tell you that. Great trading, successful trading, consistent trading is boring. It's mundane, okay? And I can tell you that if trading was exciting, you're probably not trading well. It's got to be boring. It's got to be really routine, right? If you want excitement, trading's not the place to get excitement. It's too expensive for excitement, right? And if you want excitement, go ride a roller coaster, right? Trading is for making money. It's for business. It's for turning a profit. So we want to be consistent and be a routine. Okay. So before I actually run through with you my routine for swing trading, let me show you a resource that you can use right now. So what you see over here is a quick reference checklist I've created for you for the first strategy that you've learned, which is the bounce strategy, right? So I understand that, in a bounce strategy, there's so many things you have to look out for, right? Counter trend line, 2 candle reversal patterns, MACD, stochastics, and you may be overwhelmed. So you know what? There are so many things to look out for. Which one? What if I miss something, right? So I've created this summary checklist for you so you can run through it a lot easier and kind of like check off the boxes that they meet the criteria for a valid trade. Okay, great. So let me show you how you can use this quick reference guide. And again, you can print it out and you can paste it on your wall or somewhere where you can look at it as you are setting up your trades, right? So the first thing I do is I look at the overall market. Is it bullish or is it bearish, right? I take reference to the S&P 500. Above 20 EMA is, I'm biased to take long trades. If the S&P is below 20 EMA, I'm biased to take short trades. Okay, so if we're in a bullish market, I will screen using TC2000 for 18 bounce long, 50 bounce long, and 100 bounce long setups. And I've showed you how to screen for these on the lesson already under the bounce strategy. All right, so again, it's just a summary. Similarly, I'll screen for the short bounce setups if the market is bearish. And again, these are the specific entry rules that you've learned, and I'm just going to run through them very quickly again. So again, it has to have a single or two candle reversal pattern. Now, MACD going to be bullish, stochastics oversold, price not near counter trend line resistance. There's an uptrend wave pattern. And again, we have to ensure that we go long only on high momentum stocks that are in strong sectors or industries and high relative strength. All right. And this diagram again reminds you of where we place our entry price above the confirmation candle. We place our stop loss either at the low of the confirmation candle or the low of the reversal candle, right? And the same goes for shorts, right? Where do we place our entry price, our stop loss, and so on and so forth, okay? And the next page summarizes all the reversal patterns you've learned based on the price action, right? So for going long, you've got the original two candle reversal pattern, you've got the inside bar pattern, you've got the trade through pattern, and you have got the single candle reversals. For shorts, you've got the reverse for all three two candle reversal patterns you've learned, plus the single candle reversal. So it's all summarized on this page, right? Hopefully it makes it a lot easier for you. Next, check that before you enter a trade, the company is not going to announce earnings in the next 7 days. Avoid taking more than 2 trades a day. I've just mentioned earlier. Risk no more than 10% of your portfolio. Okay, and again, it's a suggestion. You can always reduce this to 8%, for example, 5%. But I don't suggest that you increase it. Okay. Next, the exit rules you've learned, right? Take profit at 2.5R. Shift your stop loss to entry. Once the price moves one in your favor, exit. Now, whatever it is, always exit before earnings are announced, right? Just to be safe, right? Alternatively, you could exit based on a price action, shifting your stop loss to a few cents below bearish candles if you're going long, and opposite of short setups, right? Maintain a consistent risk per trade of 1% to 3%, right? So I hope this helps you. This two-page checklist that summarizes all the things to look out for before entering a bounce setup.